So net profit is taxable.
Yes.
Gross revenue is not completely taxable because some of it could be expense, right?
Okay. Yeah.
That makes sense?
Yeah.
Depreciation is an expense. It's a write-off.
Okay.
It lowers your taxable income because it adds a negative to a column that has positives.
Got it. Okay. So depreciation counts as an expense.
Yeah.
And so
If
you can,
I went and bought and I sold a car and I made $10,000, but it cost me $9,000 to buy the car, how much money did I make?
you sold it for 10
Yeah.
or you bought it for 10.
I sold it for 10 and I bought it for 9. How much money did I make?
You made 1,000.
How much money would I have to pay taxes on?
How much what?
Money would I have to pay taxes on.
The 1,000.
And if I had went to a lunch to sell that person the car and that lunch cost $1,000, would that count as an expense?
Oh shit. Yeah. I guess so,
So
yeah.
so then you would get how much money in income? Yeah, I mean
0.
tax income, zero, right? So
Yeah.
a write-off reduces your income.
Uh,
Depreciation is a write-off, but depreciation is a write-off that never costs you anything. That $1,000 sushi lunch costs you $1,000.
yeah.
Depreciation doesn't cost me anything. You can get $1 million losses for nothing.
So who who invented this concept that you can just write depreciation as an expense? Like that sounds crazy to me. It sounds like a loophole.
Yeah, it's crazy because like you could buy a truck for $60,000,
Mhm.
and that's an expense, and then expense the depreciation on it as well. And then when you sell it, you have to recapture it. But if you never sell it, it doesn't happen. Yeah. So if you worked for us, you would be paid tax-free money. You understand that, right?
No, I don't. How does
Yeah.
that
Because
how does that work?
you would get so many more losses and you're a real estate professional. The money you make at Touzi Capital is so tax advantage. I'm essentially giving you free tax-free money. You don't have to ever. People put stuff in their 401k because they want to reduce the taxable income. They want to show less income,
Mhm.
but they don't actually lose income, right?
Mhm.
They don't like actually have to give away income or
Mhm.
spend money frivolously.
Mhm.
Depreciation is free. It's a free loss. You have to invest to get it, but you invest to get other things too.
Mhm. And so does the depreciation have to be specifically for a business? As in like I can't just buy a car and just write off the depreciation, right? It has to be like for a business.
It has to be for a business. The business can make no money. Business can be made 2 days ago.
So like an LLC can write off depreciation.
A sole proprietorship, which is not a form of organization. It's just what you declare yourself.
And that's legal.
Mm-hmm.
What?
Go sell some edibles,
Uh-huh.
make $10,
Mm-hmm.
buy a car to go sell those edibles, and
Mm-hmm.
now you've lost $59,998,
Uh-huh.
right?
Yeah. And so I deduct that from my personal income.
You deduct against your real estate income. You can't deduct against your personal income unless some other things happen. But essentially, if you can like if you can get a job that classifies you as a contractor, then you can depreciate against your personal income.
So
But
have
because you're a W-2 employee, you're
Mhm.
you're the most tax disadvantaged situation ever. You just know not everything you do on expenditures is never write off. It's living life. This is a write off. This is a write off. This is a. That's what it means to have real estate and your own business.
Hmm.
You live life 30% cheaper than everybody else.
Sounds too good to be true.
That
Wow.
Tesla that cost you $100,000 cost me 37% less.
But do you have to use that car solely for the business, or you can use it for
I
personal stuff?
am the business.
That sounds like YouTubers that are like they're like
We're
lifestyle YouTubers.
Yeah, lifestyle YouTubers is what I want to do. I want to create a fucking YouTube channel and then just say I'm a lifestyle YouTuber. I'll have a business loss, but then I can use the business loss to write off all my real estate income, and I never pay taxes ever again. Boom.
Oh my god.
You asked me how to accumulate wealth. The first step is don't pay taxes that you don't have to. That's the number one step.
Okay.
If you can invest at a 37% discount, you have to like suck a lot to basically suck. Right? You basically got 37% handicap off of everybody else. You're 37% taller. You're 37% faster.
Yeah, I think that makes sense.
So I don't have to make as much money as you. I can make as 37% less and I still feel as rich.
Mhm.
Now, I make a lot more than you, but and you could probably make a lot more if you join Touzi Capital.
Okay, but I
You
so
understand that you understand that after 12 years in cash flow investing, I probably make more passive income than you do in a whole year of working at Apple.
hmm,
Basically, I could just do nothing,
mhm.
make what you made, and
But you
probably
had to get there somewhere, right? Like
probably times two, probably because I make like 400,000 a year passively, tax free.
but then it was because you had to buy properties, right? Like in like personal properties to
I
rent
had
out.
to invest, and if I had the options I do now, I would probably have invested in that than what I did before. If you can make double-digit cash flow and
Mhm.
compound and invest money, and you're probably a frugal person, you can probably accumulate money very easily. Invest that, invest that, invest that. You don't have to invest it all in Touzi deals or real estate in general. You just invest in high yield cash flow that's tax advantage. The tax advantage is essentially I'm investing at a 37% discount.
What other things
Pretty
in
good.
life, has that though? Like besides real estate, like your deals, like is there anything else that has that good cash flow like that? That's tax advantage?
Oil and gas used to have that. It still has tax advantage. It has the same tax advantage as real estate, similar. That's why a lot of people do oil and gas. Because this obviously is powerful lobbyists, right?
Mhm.
But there's not cash flow as well as before. So
So real estate is literally the only thing that has high cash flow and tax advantage.
yeah, and this is like a really good presentation. I can talk about cash flow and then depreciation and the synergies.
Okay, and so I guess my next question would be like,
Oh, by the way, when you invest for cash flow, real estate cash flow,
mhm,
you can get more leverage. If you get more leverage, you can get more depreciation Because you can buy $1 million property and you can depreciate $1 million worth of it if it's off property value, right? If you borrow at 50%, you essentially get the bank, the 50% money that you borrow does not share in depreciation. That means you get 2x the depreciation you have gotten if you just paid cash for it. Never buy things full cash. Leverage, leverage, leverage. You can almost only ever leverage in real estate. Real estate and leverage.
So do you mind explaining why, like you said, you could double the depreciation?
If
How?
a house was worth $1 million
Uh-huh.
and you depreciate $1 million of the house, because that's how depreciation works,
Yeah.
right?
Mhm.
And you bought it for $1 million, you essentially invested $1 million to get $1 million worth of depreciation, right?
And that you can
One,
write it as an expense, or right?
yeah, and so that's a 1-to-1 ratio.
Mhm.
Focus on that ratio.
Mhm.
If you bought the house at 50% leverage, meaning
Mhm.
that you put $500,000 down and borrowed $500,000 from the bank,
Mhm.
that's common, right? In fact, that's
Yeah.
a bit low leverage, right?
Yeah.
When you buy something, you buy with leverage.
Mhm.
The bank does not get any of the depreciation. The property still makes $1 million worth of depreciation. You
Mm.
just bought $1 million worth of depreciation for $500,000.
Mm. I see.
That's a 2-to-1 benefit. But people don't buy 50%. People buy 80%.
Mhm.
You get it now?
Yeah.
It's a 4-to-1 benefit. Essentially, you would never pay taxes ever again if you're in real estate. And if you're paying taxes, you're living in California or doing it wrong.
Jeez. And so in depreciation, do you write off the $1 million in this example the first year, or do you write it off like a fourth of it every like year for 4 years?
You can write it off for real estate. That $1 million, you would divide by 27.5 years
Mhm.
and take 20 that 1/27th piece
Mhm.
and then take it the first year, take it the second year, take it the third year, take it the fourth year. Does that make sense? So
And so
by the
27.
28th year, you have no more left.
So you can't depreciate it after the 28th year, basically.
You run out of depreciation.
Gotcha. But for
So
28
you took
years,
the
you
whole $1 million off. Now, there was a law change in 2017 where essentially you got um, an acceleration. So instead of having all of it 27 years, you take a chunk of it, not all of it, 20, 25% of it,
Mhm.
take it the first year. If you bought it for 20% leverage and you got 20% of the benefit the first year, you essentially just bought a 1-to-1 depreciation benefit in the first year. You're still getting a bunch of other ones every other year for 27 years, right?
Mhm.
So I could just buy things every year, which I do, and keep making the sweet, sweet 1-to-1 loss
Mhm.
that has perpetual, I mean, has continued advantage every year as well, subsequent year. So it doesn't go away, right? So then you say, what if it runs out? What if you sell? What happens usually if you sell is that depreciation gets recaptured. That's not free expenses. Essentially, it's expenses that helps you until you sell. When you sell, if you sell at a gain, if you sell a loss, it changes the math. But assume you sell at a gain because you're investing in real estate and real estate appreciates. It also depreciates. Funny. Um, when you sell, you have to pay that depreciation. So you took that $1 million of losses, pay that back at the tax rate up to 25%. So you converted 37% of tax benefit into a 25% expense 28 years later. A smaller dollar value in a lifetime away when dollar is going to be worthless. So the taxes you owe on it would be insignificant. Now, that's not what people do though. People don't pay taxes. People tend to exchange. That's a deferral of those losses into the future. Everything in real estate is about deferral. If I can just do it later, I get 37% discount now. And so you ask, okay, someone's got, you got to pay eventually, right? You're 50, 80 years old, you get paid, right? 90 years old. No. If you pass away and you've bought tens and hundreds of $1 millions of real estate and you're making $1 million a year tax free and you never pay taxes on it, you got to pay the taxes eventually, right? No. If you pass away and your heirs get it, the tax basis goes adjusted for fair market value. All the depreciation gets forgiven. It's all like, bye bye.
Okay. That's kind of crazy.
Mhm. This is why you should invest in real estate.
But it sounds like I have to buy the real estate, right, itself in order to do that.
You will be able to buy many, many real estate over your lifetime. You will have access to real estate investments like Touzi Capital at a small fraction of the price, right? You're not gonna have to put in $1 million in something. You can do it for $10,000, $50,000. You will make $50,000 every quarter, every like half year, right? Just invest that and then get cash flow and then get tax savings and not pay taxes on any of the cash flow. Now you just create a little snowball that just gets bigger and bigger and bigger and bigger and then snowballs. And in 10 years, you're making the same amount of passive income that you do now in active income in 10 years. I'm not saying 15. I'm not saying that the economy needs to do a run up. I'm saying with just 12% cash in cash.